So in this video, I'm be going over the 1031 exchange. What is the 1031 exchange? How does it benefit you as an investor? What are the time periods and how do you actually work the 1031 exchange? And how do you, as a new investor, turn a property into and make it qualify for a 1031 exchange? This is very valuable information. Please like and subscribe to the channel. And if you find this information very helpful, and make sure to watch my other videos. Okay, so we all know that the 1031 exchange is made for investors. And what the 1031 exchange gives you is the ability to acquire another property without having to pay taxes from the previous sale of the property that you were already holding. So I basically compare the 1031 exchange to a piece of clothing or something that you might buy, but probably not happy with what you bought. So you go back to the store, to get a refund, and they say, we're not giving out refunds on this type of clothing. You can exchange it for the same thing if something was wrong with it, or you can exchange it for something that was the same price. It might be a different t-shirt. It might be a different, whatever, shoes, anything. So you just exchanging it for something at the same price. But at the same time, when you do sell your property, you don't have to pay any capital gains tax on that property, and then you can acquire the other property, so you keep all your money intact. And this is very, very beneficial to the investor because it's not going to take away from any of your profits, which is a very good thing. So to do the 1031 exchange, you as an investor cannot touch any of the money from the proceeds of the sale of your house. It has to be kept in escrow for IRS purposes and reasons, because it is a lot of money. And if it's not handled or dealt with correctly, the IRS will come after that money as a capital gains tax, which that tax could be very, very cost effective to you. You have a certain period to exchange exchange properties and exchange funds and get another sale of the house. So say, for example, you have a single family home that you're renting out. It's an investment property. The 1031 exchange is not going to let you go from a single family house to a vacation house. It has to be something of a like property or multi-family home and go down to, a beach house. It has to be the same or like the product that you already have. The good thing about the 1031 exchange, it will allow you to at least, acquire 3 properties. After 3 properties, then you're not eligible for the 1031 exchange. So you can take the sale of your one property from the sale of that and then do the 1031 exchange. So I know what you're thinking as an investor. I know what you're saying to yourself. What if I see a property that I want to jump on quickly and I might not have enough time to sell my other property? So that's when you would do a reverse 1031 exchange. And that way you would be able to acquire that property that you wanted to jump on over. You say, I got a good deal in that. You can get that property and then sell the property that you already have later and flip it over into the 1031 exchange, where you don't get taxed on that profit that you made from that other property. The 1031 exchange also allows you to have a depreciation loss tax credit, where you be able to take advantage of that if you took a loss on the property that you already held. Also, there is a period when you're doing a reverse exchange. I think it's either 45 days or 145 days, where you have that time frame to sell that property after you had acquired that other property. That's the good thing about it. Now, you're a new investor, you have a single family home, or you have a beach house, and you want to qualify for 1031 exchange. Say you see another beach house that has more bedrooms. So to make your property eligible for a 1031 exchange, you have to show proof or evidence that you've turned it into investment property and that you've made it a rental. And once you make it a rental and show evidence and proof that you made it a rental, now it is eligible for a 1031 exchange. So you're going to change it for, you can't go from a vacation beach house to a mansion vacation beach house. It has to be like the product that you are already holding. So hopefully this answers all of your questions about the 1031 exchange. If you need more information on the 1031 exchange and more of a breakdown on the 1031 exchange, because I just gave you a basic overview, you can feel free to contact me. My information is in the description below. Now, also, as you being an investor, the market is getting ready to shift. I went over this in my other video about the wealth transfer and how things are going to come into play, that the old system, the old companies are moving out of the way, and the new system and the new way of doing things are coming into play. And that's going to open up a huge investment opportunity. So what I've made was the financial explosion. It's going to give you a financial explosion while real estate is at the top of the market with prices, so that you be able to get on the ground level of these investments, of these companies, and you'll be able to explode your financial situation massively. That's also going to be in the description below. You definitely want to take advantage of the situation, because the wealth transfer, it's here. It's about to be transferred over into something new. Sort of like Blockbuster and Netflix. Blockbuster thought it was always going to be around, but the new system, the customers wanted a new system, and Netflix provided that need of what the customer wanted. So it booted out Blockbuster, and Netflix came into play. So one thing that's evident, one thing that we know that we cannot stop, and that is change. So that's going to be in the description below. Well, it was good talking to you today. I hope you found this video informative, and all the rest of my videos informative. You have a good weekend.